Welcome again. Continuing from our topic of IAS 16 property plant and equipment. Now it is about subsequent measurement. This is the most important as far as F7 syllabus is concerned. After initial measurement, an asset can be measured at cost model or at revaluation model. If you are using cost model, it means asset would be recorded in the statement of financial position at its cost less accumulated depreciation, less accumulated impairment. And if you are using revaluation model, then the asset would be recorded at revalued amount or fair value, less subsequent depreciation and less subsequent impairment. So now question is when to use revaluation model. When to use revaluation model? If the carrying value of asset is materially different from its fair value, different from fair value, then you should use revaluation model. The next question is which type of assets are most commonly revalued? So these are tangible, which have physical existence, non-current assets that should be most commonly revalued, like building, plant and machinery, land. These are the common examples of assets that are commonly revalued. The next question is, can business use different model for different class of asset? Or you can ask that you can use cost model for motor vehicle and revaluation model for land and building. Is that possible? Answer is yes. You can use different model for different class of asset. Land and building is another class of asset. Motor vehicle is a different class of asset. So for motor vehicle you can use cost model, and for land and building you can use revaluation model. Now about conditions of revaluation. Revaluation should be at its fair value in accordance with your syllabus. Once you revalued an asset, then after sufficient regularity, sufficient interval, you have to revalue the asset again. This sufficient interval depends upon the volatility in the market price of an asset. If the market price of asset changes very often, then the asset should be revalued every year, and it could be revalued after a couple of years, or after a 3-year or 4-year or 5-year times, depends upon the management judgment. Then the third condition is that entire class of asset should be revalued. If you are revaluing land, then all land of business should be revalued. If you are revaluing any building, then all buildings used by the business should be revalued. So entire class of assets should be revalued, and for this it should be a professional valuer. It should be a professional valuer that revalue the asset. Now about process of revaluation. First step is step 1. Restate asset at its fair value. Restate asset at its fair value. Remember, this is the process of revaluation for non-depreciated asset. Like land. If you have to revalue a land, then first step is restate the asset to its fair value, then compare the fair value and the carrying value. If the fair value is greater than carrying value, the difference would be recorded in the comprehensive income, other comprehensive income. And if the fair value of asset is less than carrying value, then the difference would be recorded in statement of comprehensive income, or you can say statement of profit and loss. Again, process of revaluation is, first step is to restate the asset at its fair value. Step 2 is to compare the fair value with the carrying value. Step 2 is to compare the fair value with the carrying value. If the fair value is greater than carrying value, then the difference would be recorded in other comprehensive income, and if in the name of revaluation surplus. And if the fair value is less than carrying value, it should be recorded as an expense in the statement of profit and loss. Now situation is increase in the value of asset as a result of revaluation. Land which cost 1000 is first time revalued to 1200. Should the journal entry to account for revaluation. So first step is to record the land to its fair value. As a result of recording asset on its fair value, the value of asset would be increased by 200 from 1000 to 1200. This is said to be the restatement of value of asset. And now you consider that the fair value is 1200, the carrying value is 1000. As fair value is greater than carrying value, the difference would be recorded in other comprehensive income in the name of revaluation surplus. So this would be the entry for recording increase in the value of asset. Now is the situation if the assets value increase as a result of first revaluation and then decrease in subsequent revaluation. So in that case, continuing with the above example, if on next revaluation land decreases in value and its value becomes 700 now, so you need to consider that the value of land has been reduced to 700. So restating the value of land would decrease the value of land by 500 from 1200 to 700. The value of land has been decreased by 500. Next is you need to record debit. First, whatever amount has been recorded as revaluation surplus should be removed to nil by debiting the revaluation surplus already exists, and that is of 200. Remember that we have created a revaluation surplus of 200 in the first year. In the second year, when the value of asset has been decreased, then such revaluation surplus is reduced to nil by debiting it. The further decrease in the value of asset would be recorded in the statement of profit and loss as an expense. That would be the entry for recording revaluation decrease, subsequent revaluation decrease. Then another case where there is a decrease in the value of asset as a result of first revaluation. As a result of first revaluation means first time you have revalued the asset, and as a result of such revaluation, if the value of asset has decreased, land which costs 1000 is first time revalued to 800. In that case, what should be the entry? We should credit the land by 200 as we are restating this. The value of land has decreased from 1000 to 800, so we need to restate it by crediting the value of land. Now as the fair value is 800 and carrying value is 1000 and carrying value is greater than fair value, then the difference would be recorded in statement of profit and loss as expense. This is the case if an asset is first time revalued downwards. Subsequently, after first decrease in the value of asset, subsequently there is an increase in the value of asset. How it should be recorded? Continuing the above example, if on next revaluation land decreases in value and it becomes of 1100 now. From 800 the value of asset land has increased to 1100. So first you have to restate the land to 1100 by debiting it further 300. Then whatever amount you have recorded as an expense whatever amount you have recorded as an expense there in the previous year would be credited in first 200, and the further increase in the value of land would be recorded in the name of revaluation surplus. So this will be the entry for recording first decrease and then increase in the value of asset. So we can say these all things in the way that the revaluation model involves revaluing the assets carrying amount to its fair value. Where an asset is revalued to fair value, its carrying amount either increases or decreases. If the asset's carrying amount increases as a result of valuation, the increase is either recorded as revaluation surplus in case where there is no previous revaluation decrease, and recorded as revaluation income if there is a previous revaluation decrease. So that is what we have done above in the above example. And secondly, if the assets carrying value increases, the increase would be first recognized in the profit and loss as income to the extent that it reverses a previous decrease in the that was recognized in profit and loss. And any increase that does not reverse a previous decrease in the profit and loss should be recorded in other comprehensive income in the revaluation surplus. That is the summary of what we have done in these 4 examples.